I am Eric with Mother.com. I greet you, beloveds, in the love and in the light of the one prime creator. As we take a look at markets here, I want to use the Brazilian market ETF, the EWZ, to explain some of its movement over the last couple of days, if not last couple of weeks and months. This is the EWZ, again, another short video from an educational perspective. There is so much information packed in this one chart, as is packed in any one chart, if you understand what to read. And imagine we are only looking at this from the RSI perspective only. We are not looking at other indicators or studying the price action itself, just from the RSI. All right, let's go. Some lines. Take the top side line, and you see that over the last 2 days, we've come and tagged this level here. The market is pulling back, or the EWZ is pulling back. All right, that's one line. By the way, before I go forward, remember the concept that I talk about a lot, which is RSI 50 support or resistance. This is uniform activity above RSI 50, back below it. That tends to give us a reversal, as we can see here. Again, uniform activity above RSI 50 and back below it. Guess what? That's another reversal area for a swing trade lower. Oh yeah, and over the last 2 days or so, we came close to 50 and we seem to be rejected at this moment. So another swing trade is being indicated to take place. And that's just a side note. You can take a look for yourself on the way up. The RSI 50 was holding above the 50 line with uniform activity. We held above RSI 50 here during this pullback. The market bounced. Double bottom support above RSI 50. Guess what? Prices moved higher. As I noted, there's a lot of information jam-packed in this single chart. Now, let's draw some other RSI lines. The first one can be drawn as follows. Take the lows here, connect them, and extend them out. We can see here what is developing. A break of this trend line here led to a deceleration of price, and now we seem to be weaving ourselves above the line, back below it. Again, another indication that this is a potential area for a reversal lower. Now, I should point out here before I forget that in all of these showings of a pullback, this can always change because the market has free will. Movement above this area of the RSI, back above 50, prices are going to have a reason, an excuse to go higher if they can clear the previously drawn line. If I include the previous line, if the market can clear those two lines and other lines that I'm going to draw, expect the market to go higher. But for now, it looks like it is suggesting resistance. Now I'm going to take the liberty of drawing another line, and I'll explain it. This line here connects to that short term. There's a little bit of a node right there. Hope you can see it. In fact, let's change the width of this current line. So just bear with me. Give me a second here. All right, let's do this. So hope you can see the line. Oh, maybe that's too thin. Let's use this line here. So you can see the little bit of a top there. And this was significant for the market because we start moving higher somewhere there. Now, I'm going to extend that line, and you'll see how it makes a lot of sense. All right, now notice that on the pullbacks, the market was using the line for recovery. As I say, there's a lot of information, and this RSI tool is very good at capturing the market's swings. Now, we can see a break of this trend line here leads to this movement. We come here. In fact, there's a little bit of a resistance there, so there's another resistance right there. Uniform activity above the line, back below it for a reversal that we saw there. Same thing, uniform activity above the line, back below it for a reversal there. And now a reversal right there. And again, so we can anticipate that the markets are going to be down until such a time as we can move above the black line. Hope that makes sense. So in a sense, I'm also saying markets are complex, and a lot of the things that the markets tend to do, we tend to be confused by them because, let's be honest, we don't see a lot of this information in our chart reading. All right, let's take a look at another way of looking at this. There's a break right here. This break also is relevant because we break here for that, actually for this top right there, coming off the top right there. Now notice if I extend that line as such, I get two other points. Break here, resistance, resistance. Ain't that nice? All right, we're going to draw the same line but use different way of looking at it. End up with the same conclusion. We get this break line right there, which means that that's a significant area. It so happens to be around RSI 50. Now we take that line and extend it out as such. Remember the uniformity method. Links are going to be in the description. So notice what happens. Uniform activity above the line, back below it for a resistance there. Uniform activity above the line, back below it for resistance there. And now same thing there. So all of this pullback possibility and potential have been telegraphed by the lines that we've been drawing here. Now, as a side note, let me draw another line which goes back to these lows. It's going to touch a lot of the lows. I'll do it like that. So touching a lot of the lows that we can see over the last year on this daily chart. Touching all these lows and more importantly, recent lows here. Now you'll notice that we broke below this. So we can say this was a violation of a momentum in the Brazilian market. And what I'm proposing here is if the market ends up rolling over and staying below this blue line, if RSI stays below the blue line, I would suspect that the Brazilian market is due for a bear market behavior because of the length of this daily chart. This is a long-term trend line in a sense, medium-term trend line, and staying below this blue line, in my opinion, means that the markets have now confirmed that they are in a new status, in a new era, and this era should be one pointing significantly, severely, aggressively down. All right, since it's an educational video, let me just draw one more line. It is this line right there. We can draw it as such. And we know that the market responded well because it moved higher right there. It, in a sense, is what I call a swedge breakout or a sentiment breakout, in that there was a wedge, the market broke out. That's also a method unto itself for timing momentum. Right there was your entry. Now what we're going to do is extend this line, and you can see where I'm getting at. Take note of where the market's been bouncing. Double bottom support here in early July for that swing trade. Came close there and held for that swing trade opportunity. Went below the blue line, back above it for another recent bounce in the Brazilian market. So let's wrap this baby up, or this chart up, and we can say that generally speaking, to expect a bias to the downside as long as your RSI is net below 50. Expect a bias to sideways to down market as long as the RSI is below 50, because the truth is, when markets are trending higher, the RSI has to be above 50, as we can see a perfect example here. We can also say that net, if you want to keep it simple, if there's such a thing, it's going to be until we move above the declining line that we have a chance to move higher. Similar to this previously mentioned wedge situation here that led to this nice move. Until we see something like that, these markets are sideways to down, in my humble estimation. Of course, the market has the final word, as it always does. And so it is. I am Eric with Mwathir.com. It is a joy to leave you in the love and in the light of the one infinite Creator. Go forth, therefore, rejoicing in the power and in the peace of the one Creator. Adonai, my friends. Adonai.